Welcome back. I'm Pratap here. Today is 8th December 2024. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel homepage, click on the tab posts. Some of you might be seeing the tab community. Click on the tab. You get access to our free training course. And this post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist to supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Now let's get into the analysis discussion. The previous end of the day report, we identified 1, 2, 3, 4, 5, 6, 7 and 8 including Nifty. So we identified eight high liquidity zones. Out of these 8, we got 2 trades and both are successful trades. The first one is Laurus Labs. Very interesting. This is a 75 minutes high liquidity demand zone. And this 75 minutes high liquidity demand zone is created inside the daily high liquidity supply zone. Let me go to the daily time frame. This zone was created somewhere in the year 2020 or 2021. Yeah, 2022. 17 August 2022, we have a leg in. After that, 2 base candles and then a drop candle. Our software identified this zone. Previously, we have drawn this zone. But we didn't fine tune this zone because the 5 minutes data is not available. But have you noticed I have drawn a 15-minute zone in this daily high liquidity zone. This 15-minute zone is acting as a high liquidity zone. 15 minutes high liquidity zone. Multiple times it is holding the prices. See, it's a very old zone. And today our target is also on this particular zone. This is a drop base drop, this 15-minute zone. You can't fine tune with 5-minute zone because 5 minutes data is not available in TradingView for the year 2022 because the TradingView is giving you only 1 year access. For premium subscribers, TradingView is giving only 1 year access for the data. So that is the reason why. But anyway, this 15-minute zone we are using as a target for the 75-minute zone. But interesting, let me ask you a question. What is supply zone? It is a seller's area. Lot of short trades will be there. In seller's area, you cannot buy. If you buy, you get losses. This is what you learned in the initial stage of your training course in the phase 1 training program. Do you remember all those points? Especially when I talked about in phase 2, when I talked about the curve or location, we have discussed about HTF, ITF, LTF. HTF zone is mainly for identifying the location. That means buyer's area and seller's area. Buyer's area you should not sell, seller's area you should not buy. But if you look into the HLQ zone, is it not against our fundamental principles? I am asking this question to everyone. Is it not against to the fundamental principles? Yes, it is against. Even trading against the trend. In uptrend, going for short trades. In downtrend, going for long trades. Is it not against our fundamental principles? Yes, it is against our fundamental principles. Similarly, trading against the price direction, is it not against to the fundamental principles? Yes, it is against the fundamental principles. That is the beauty of our high liquidity zones. High liquidity zones works against all the fundamental principles. That's why in HLQ zone analysis, we never bother about the trend, we never bother about the price direction, even we never bother about the curve or location. That is buyer's area or seller's area. Even in the seller's area, we are going for a long trade. Why? Because we identified a 75 minutes high liquidity zone, which is inside the daily high liquidity zone. See here, this 75 minutes high liquidity zone, part of the daily zone. Let me go to the 75 minutes time frame. How our software identified this zone? This candle our software identified as a failed ERC candle, as a leg-in, and remaining 4 candles as a base candles, and then a rally candle. It's like rally base rally, failed ERC considered as a rally, because from here prices were moving up and finally closed here. And 4 candles and again a rally candle. Okay, this is the 75 minutes high liquidity zone. And you see how effectively our trade is executed. In today, prices entered into this zone, picked up the fine-tuned orders from the fine-tuned 5-minute zone, and then started moving up and again reached this 15 minutes high liquidity zone. How can I say high liquidity? Maybe it is already testing several times, just assuming, maybe. Maybe according to software point of view, it may not be a high liquidity zone, but at least assuming it could be a high liquidity for time being. Currently it is holding the prices. But whatever it is, the supply zone, moreover, this entire supply zone is also a high liquidity zone. This is a daily high liquidity zone, but we are planning our trade in the 75 minutes high liquidity zone. First of all, how I fine-tuned this zone? Here we have 2 order flows I am seeing. Let me go to the 15 minutes time frame. In the 15 minutes, we have 2 order flows. The first order flow drop, base, rally. Second order flow drop, 3 base candles and rally. And both are LOTL zones. But both these LOTL zones, they are having just overlapped or just touched the proximal line and this distal line. They just touched. So that is the reason why both these zones are again having their 2 independent 5 minutes order flows, and they are not LOTL zones, because there is a good distance between these 2 5-minute zones. See here you have a drop base rally, but it is already tested. It is not a fresh zone. But this one is a fresh zone. This is a failed ERC candle. As a leg-in, you have a base, you have a rally. How you can draw the zone? 3 ways you can draw. Like this. This is a type 1 proximal. This is a type 2 proximal. Here you can plan the trade. If you feel risk, you can't handle this much risk, still you have the option to go for type 3 proximal. So we got the entry even from the type 3 proximal today. If anybody planned your trade from type 3 proximal, your trade might have executed today. Anyway, how you are planning is up to you. Whether it is a type 2 entry you are planning or a type 1 entry you are planning, these are all depending on your risk management. Type 2, 1.5% risk you need to handle. So it is within 2% level only. But some people can't bear that much risk. They may feel 1.5% is a little heavy for them. Still they can go for type 3 proximal. Type 3 proximal also prices entered. So that's why I am trying to say, whichever the trade you plan today, your trade definitely would have executed. The type 1 or type 2 or type 3. The only thing is, there will be some disturbance in achieving the RR. Type 3 achieved 1:7 or 1:8 RR you achieved. Type 3 proximal 1:4 RR we achieved. So either way it is a successful trade. So from this zone, and it reached the 15 minutes target zone. And how much profit it gave you? Laurus Labs has given 14,110 rupees profit, which is 7% ROI. As per one futures margin cost, it gave you 7%. And profit as per one futures margin cost, 14,110. If you are planning your trades in options, maybe you may get even more, 3 times or 4 times. But risk management, you should be very careful. The biggest problem with options is risk management is very, very critical. Properly you should plan. And time decay is very high. Your risk levels will be changing. That's why if you are having only managing skills with options, then only you go for that. Otherwise, the futures might be safest. Maybe you may feel like the profits are lesser compared to the options, but risk management is very easy. Still, this is a very good profit. Don't compare with options profits. Still, it is a very good profit. You got 7% ROI. Even anything goes against your planning, your loss also going to be very minimal in futures, but that is not the case with options. You also get heavy losses in options. Okay, anyway, I am not getting into those levels. They are all depending on your individual trading skills and especially your skills related to different assets management. Okay, so this is about Laurus Labs, which gave 7% ROI. The next one we got successful trade is Angel One. So Angel One is a daily high liquidity supply zone. This is a daily high liquidity supply zone. Of course, this is also having a rally-based rally. Daily high liquidity demand zone is also there. But prices were closed near to the zone. But yesterday first prices entered into the demand zone. From here again they pushed and prices reached the supply zone. There we got the trade. And after that again it reached the target. But daily zone there is a fine-tuned zone. Prices didn't reach up to that. Otherwise we would have got both the trades. Demand zone trade as well as supply zone trade. But anyway, the price yesterday the stock is near to the supply zone and luckily we got a very good trade even though first prices are entered into the demand zone. And this is a very old zone created in 7th February 24. So we have 7th February means we can access even 5 minutes data. So we have rally, 2 base candles and drop. And this one is fine-tuned with 75 minutes time frame. Here we have in the recent price action, that is 16th October 24, we have a drop, 2 base candles and a drop. This is the first 75 minutes zone recent price action. But in the initial stage at the zone creation also, 175 minute zone was created. That is nothing but rally, base, drop. Rally base drop. This is the 75 minute zone. But this is having an origin, a 5 minute zone as an origin is there for this particular zone. Okay, anyway, again these 75 minute zone should be, both the 75 minute zone should be fine-tuned with 15 minutes time frame. Of course, here also a drop base rally was created in the demand zone and it is having a fine-tuned zone. Price didn't enter up to this area. Morning price opened, entered into this area, sharply prices moved up and reached our actual zone. What our software identified, stocks near daily supply zone. Okay, now this one is again fine-tuned with the 15 minutes time frame within 75 minutes time frame. How we fine-tune? Here we have a drop-based drop. We have a drop, a base, a drop. Similarly, here also we have a 15 minute zone. And this drop base drop structure is not really good, because sharply it's a very big risk. But here, if you notice, rally base drop is there, the 15 minutes area that is overlapped with this 75-minute zone. 15-minute zone as an horizon to the 75-minute zone. Again, this one is fine tuned with 5 minutes time frame. So here, within that 15 minutes, we have a rally, 2 base candles and a drop. This 5-minute zone is the horizon to this entire 75-minute zone. This is the 75-minute zone. This 75-minute zone is having this 5-minute zone as an horizon. And once it picked up the orders from the horizon, see how sharply prices came down. So definitely we want to plan our trade in this area. But before that, we have another fine-tuned 15-minute zone. That we need to fine-tune with 5 minutes time frame again. This is the area. And this is the 15-minute zone. In this 15-minute zone, the structure is not at all good. But have you noticed there is a drop base drop? This is the horizon for this entire 15 minutes area. So here you have the real institutional order flow. Drop base drop. From here it picked up the order. See, and then how then it started moving down after picking the orders from the horizon. So that is the reason why we want to plan our trade in this 5-minute zone as an horizon to the fine-tuned 15-minute zone. Of course, a fine-tuned 75-minute zone also it is having. See, today what happened? Prices entered into this. Here you have a fine-tuned zone is there, 5 minutes, fine-tuned zone. We have a rally, 1, 2, 3, 4, 5 base candles and a rally. And this 5-minute zone we want to plan. Actually, I consider this as a ERC candle, failed ERC as a leg-in. And this is the institutional order flow for me. Actually, I didn't consider this. This one I considered because we have a big candle here. And with pro-gap hidden body, this is a rally candle. So here, trade plan for the long trades, but price didn't come today. Before reaching itself, it turned and then started moving, and now it reached. When it reached at 13.5, it reached the zone. It gave an entry. After that, have you seen? This zone is slightly pierced. Of course, we are within the stop loss. Slightly pierced. It looks like our stop loss is about to hit. Then see, again sharply prices moved down and finally reached the 15 minutes target. Here we have a 15-minute zone, rally base rally. The moment this candle is completed, a new. But initially, what is our planned initial trade? This is the area. Failed ERC, drop rally. This is the initial planned. But this candle is completed, then it resulted as a new 15-minute zone, rally base rally. So immediately you have to adjust your target to this zone. Instead of this drop base rally, this failed ERC candle is like a drop as per the dynamic view. Base rally, instead of this target, you have to revise to this rally base rally. This is the medium size like candle, base and a large candle. Finally it reached. Even though it pierced slightly, prices came. So that's why our stop buffers are very, very important. We already learned a stop buffer concept, I think in lesson 19, right? 18 or 19, one of these lessons you learned. The importance of that's why every day in our premium videos, at the end of the report, I am generating stop buffers. Okay, how much profit Angel 1 has given? First of all, when we got the trade in 1 o'clock. 15 minutes, 5 minutes candle we got the trade. Actually, to be honest, in this candle we got the trade. Now prices entered here. After that, they went deep. reached the digital line, slightly PR, sharply came down. So that's why 1 o'clock 5 minutes afternoon is the entry, and when it reached the target, 1 o'clock 45 minutes. That means within 40 minutes your trade is completed. Within 40 minutes. How much profit it has given? 9,840 rupees profit it has given. And it is 4.8% ROI. As per one futures margin cost. So this is about Angel 1. These two are the successful trades. When you look into the remaining, let us start with Nifty. Nifty is having daily high liquidity supply zone. We have a drop, base, drop. Drop, base, drop. This is what our software suggested yesterday when prices were closed. But today in the market, prices did not reach. But how I fine-tuned? Go to the 75 minutes time frame. In the 75 minutes time frame, I identified a 75 minutes order flow, a rally, base, drop. Okay, this one again, the 75 minutes fine-tuned with 15 minutes time frame. Look into the 15-minute structure. We have a drop, 3 base candles, and again a drop candle. And this drop candle is not at all convenient. Actually, it is, strictly speaking, this is not a valid zone. Why it is not a valid zone? The body should come out of the zone. It should not close inside the zone, leg out. But here entire leg out is part of the zone. So that's why I am deleting this. Because sometimes you people draw such kind of zones. That's why I want to tell you. See, this is the base. To open about the base. So, till the leg out, we will be drawing the base. But finally, when you draw, this entire candle is closed part of the base. It's invalid. That means you don't have a valid. Sorry, I made a mistake. I went to the 5 minutes time frame. "15 minutes is okay. I was talking about 5 minutes, why I didn't draw. Sorry, actually I deleted 15 minutes one. 15 minutes came out of the zone. We have a drop, base, drop. This 15 minutes is valid. But 5 minutes, why it is not valid? Why I did not draw 5 minute zone is because of that. This candle is not a valid leg out because it is part of the base, 5 minutes base. You can't draw this. And even if it comes out of the zone, still we don't consider because of the risk management. There will be a huge risk if you draw a zone, even if it comes out of the zone. Let us combine both these candles, assume it came out of the zone. Still you don't draw because of the risk management point of view. So there are higher chances this zone might be violated, but here you are also seeing, oops, what happened? Okay, it looks like there is a LTF zone, drop, base, drop. See here? This is the origin. But why I didn't consider is almost till the distal line it reached. What is the high of this candle? 25,029.80. 25,029.80. And this high? 25,029.50. You have only another 30 paisa. That means another 0.30 points. Still space is there for you for the remaining order flow. That's a very, very tiny order flow. Maybe, who knows, maybe order flow might be strong, but such kind of risk we don't want to take. So that is the reason why I just left this and I didn't draw. But anyway, for future what's really happening, study point of view will keep. Remember, this is not for trade planning point of view. Because we can't take such a heavy, such kind of a huge risks with 20 points order flow. Not 20 points, 0.0. That means 20, it's like equivalent to 20 paisa. because it is not a price, right? Nifty, it is index. 0.20 index is, it's a tiny index for 25,000's point of view. So easily it will be violated. But interesting thing is, this entire daily high liquidity supplies on Nifty is having an horizon drop, base drop. This is also acting as a high liquidity zone. Prices went, came down, again prices went, came down, again prices went, came down. This time this entire big move has started because the high liquidity daily demand zone is getting created. Now before that, again institutions created some order flows, further pushed it down. But this is the area we have the real bet. The actual institutional order flows, huge order flows might be available here. The 5-minute zone as an horizon to the, but this 5-minute zone could be a high liquidity 5-minute zone as an horizon to the daily high liquidity zone. Not only horizon, it is also acting as a high liquidity zone due to multiple tests in this area. We are assuming it could be. Okay, this is about Nifty, HLQ zone on daily time frame. So maybe in the coming days, if this 5-minute zone is a holding Nifty, Nifty might be moving within this area for some time. Until one of, because this is a high liquidity demand zone, this is a high liquidity supply zone, and one of them has to be violated to determine the further direction of Nifty. Earlier we have seen one high liquidity supply zone somewhere here, I think drop, base, drop. There also we have a 5-minute horizon, several days it holded the prices. After that it is violated. Institutions, see how cleverly they created one more daily high liquidity supply zone with 5 minutes horizon. So they don't want to easily let the prices move up. Okay, this is about Nifty. Next one is Apollo Hospitals. This is also a daily high liquidity supply zone. We have a rally, base, drop identified by our software. We didn't get a trade today, but how I fine-tuned, let me explain. This daily zone is fine-tuned with 75 minutes time frame. See, properly you should observe. This failed ERC candle completely coming out of the zone. I am considered, based on the dynamic view, I am considering this as a leg out. And this I am considering like a drop candle, drop, 2 base candles and drop. That way I have drawn this. Drop, base, drop. With the hidden body and dynamic view, I consider this leg out. And within that 75 minutes time frame, the price structure is not at all good, very bad structure. So within this area, I am not happy with this structure. Sorry, this is 25 minutes. I am not happy with this structure because of several candles, base candles, 1, 2, 3, 4, 5, 6, 7, 8, rally 8 base candles, and maybe even if you consider failed ERC candle as a drop. But interestingly, I identified drop, base, drop. Maybe this leg out is not very great, but okay. And this is acting as an horizon to this 75 minutes zone. This is the 75 minute zone. For this 75 minutes, we have 15 minutes horizon, drop, base, drop. But this 15 minutes horizon makes sense only if it is having a fine-tuned 5-minute zone. Is it having fine-tuned 5-minute zone? Go to the 5 minutes time frame. Inside that 15-minute horizon, we should have fine-tuned 5 minutes. Horizon should be available. So here we have a drop, base, drop. This drop, base, drop is acting as an horizon to this entire 75 minutes zone. Previously, see, prices went from this horizon, drop, base, drop, it picked up the orders, then sharply it came down. how strongly it pushed the prices. Maybe institutions might have kept a very strong order flow in this area. That's why such a sharply it came down. After that, market further moved down and further moved down. This entire bearishness is because of the order flow that pushed the prices down. Continuation. And after here, it reached here. Again, there was a recovery and started moving up. So that's why this 5-minute zone, fine-tuned 5-minute zone. Why we are saying fine-tuned 5-minute zone? Because it is a part of the 15 minutes zone. This 15-minute zone is again overlapped at the distal line to the 75-minute zone. Everything is part of the daily zone. So that's why we are saying this fine-tuned 5-minute zone is an horizon to this 75-minute zone. So definitely strong order flow. Next time we should not miss such kind of trades when prices are entering into that area. But today we didn't get a chance to take a trade because prices did not enter into this zone. And next one is Hindustan Copper. Hindustan Copper I already explained to you. This is also a daily high liquidity supply zone. Please refer the previous videos. So we didn't plan any trade from here. This is also having 75 minutes high liquidity zone here. Previously we got the trade on Thursday. But Friday we didn't get any trade. And next one is Aurobindo Pharma. This is a 75 minutes high liquidity demand zone. How we identified? Rally, 3 base candles and a rally candle with pro gap. This is the ERC candle with rally ERC candle. Our software identified this zone. Software identified this candle as a medium size candle, part of the base. Okay, anyway, this one we fine tuned with 15 minutes time frame. Here we have a 15-minute zone. We have rally 1, 2, 3 base candles and a rally. This is the 15-minute zone. This 15-minute zone might be acting high liquidity because several times this zone is getting tested. After that also it is tested. So we have a 15 minutes high liquidity zone. Rally, base, rally. Rally, 3 base candles, rally. And this 15-minute zone is having a fine-tuned 5-minute zone. And that is also acting as a high liquidity zone. This fine-tuned 5-minute zone. So we have a drop, we have 2 base candles, and then we have a rally candle. Drop, base, rally. This is the 5 minutes, fine-tuned 5-minute zone. From this fine-tuned 5-minute zone, prices are entered and see first rejection. After that prices entered and again moved up, almost came near to this zone. Of course, if you draw wick to wick, see this is also tested. I have drawn type 2 proximal here. This is another test and again moved up. Several times this zone is getting tested. And recently also it is tested from this zone and prices moved up. Not only that, recently again you have a drop or maybe rally, failed ERC, 3 base candles and a rally. Again one more 5-minute zone is created from this order flow. So that means this order flow, maybe some more institution orders are added, new orders in this. Next time also you can plan a trade in this zone. Generally high liquidity zones, how we plan our trades until the zone violates, we'll keep on taking the trades. One day that expiry period will come, that day it will be violated and we have to accept that stop loss on that day. Until then we enjoy the profits. This is how generally we plan our trades with high liquidity zones. And this 5 minutes high liquidity zone is a fine-tuned high liquidity zone. This 5-minute zone is a high liquidity and also it is fine-tuned. If it is not fine-tuned, this will be an aggressive trade setup. Because it is fine-tuned, this is not an aggressive trade setup. It's a regular fine-tuned zone, but apart from fine-tuned, it is also high liquidity. So that's why such kind of zones will have more power. More times it will be tested and more times it will give us profits. Okay, anyway, today prices came somewhat close, but this is not good enough to plan our trade today. So that's why we didn't get any trade opportunity. Laurus Labs we discussed. The next one is TVs Motors. This is also a 75 minutes high liquidity demand zone. We have a rally, 2 base candles and a rally. And look into the 15 minutes. We don't have a proper 15-minute structure here. Earlier there could be a structure, 15-minute structure here, maybe rally, 3 base candles rally, but this one is violated previously. But this is the thing, the thing is here we have a 5-minute zone as an horizon. Look into this 5-minute zone. We have a rally as a leg-in, you have a base candle, again you have a rally candle. After that prices came here and took the order flow, moved up, and once again prices came here, and this time this zone was created with a huge move. And after that, next time, last Thursday prices came. Sorry. The Thursday. We are discussing about Friday's trades. If today is Friday, yesterday is Thursday, right? That means the previous day it gave a trade, and see how sharply it moved after it entered into the zone. But unfortunately, today's trading session, prices did not enter into this zone. I'm assuming Friday is today, because instead of analyzing on the last Friday, I'm analyzing on Sunday this stock. But still, all these trades are, all these setups are on Friday setups. So that's why I'm referring the words today and yesterday. You have to understand. Today means not Sunday. You assume it is Friday. Okay. See the power of lower time frame zone as an horizon to the higher time frame. Lesson number 22 concept. Some of our members are effectively using these concepts and getting good profits. Even Q&A 16 also explained about one of our members yesterday Thursday. He took a trade from Nifty. The 5 minutes horizon for 125 minutes high liquidity supply zone. And he grabbed a huge profit. 1,59,000 rupees profit he got by investing 4 lakhs. Of course, he invested in options. Futures you can't expect that much profit. But options, the problem is risk management. If our analysis fails, you get huge losses. That we should not forget. That's why risk management should be managed. I'm not good at that much risk management skills I have in options. That's why my focus is always in futures, because I've been trading in futures for the last 20 years almost. Since 2003, I've been into futures only. Okay, anyway, see how much profit you would have got on yesterday on Thursday's session. Those who captured this move. But anyway, today we didn't get trade opportunity. Today price entered, but they didn't move. Sorry, this is Thursday only. Today price did not enter into this zone at all. This is today morning 9:15. This is only the low of the candle, today's low. So we didn't get a trade. And the last one is MFSL. This is a 75 minutes high liquidity supply zone. Rally base drop. This rally base drop fine tuned with 15 minutes time frame. We have a rally, 1, 2, 3, 4 base candles and a drop candle. Now in the 5 minutes, 2 order flows are identified. First order flow is not really convincing. Rally base drop. But this is again a drop, base drop. If this drop base drop is violated, definitely we can plan a trade, because by the time the demand would have been weakened and this order flow will push. why you may ask a question, why I was not so convincing this rally based drop? Because this candle may be a little bigger, but okay, still acceptable. But see, after that price structure was sluggish, it moved here for a long period. So that's why it concerned me. But on the other side, probably the order flow in this area could be very strong. Maybe demand is very strong, and this is supply is holding the prices, right? That means the supply also might be strong. That's why by comparing both these points, finally I convinced and I drawn rally based drop. And this drop based drop, good follow through candles and very big move. All factors are very convincing in this area. This is the area we planned our trade, but unfortunately today we didn't get any trade from that area. Prices didn't enter into the zone at all. But we got 2 successful trades today. Today none of the zones are violated. And 2 trades what we got, they are very neat and clean trades. That's it. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.